God it's Friday, but we still have to do business before we get into that weekend mood. This is 55 minutes of current and relevant business conversations. That's what we do here in Business Morning, and I'm Ini John McCran. We start business as usual from the global space where prices, that's oil prices, they fell after United States President said that the war in Iran should be ending pretty soon, while a ceasefire between Israel and Lebanon raised hopes of easing supply disruptions. So yesterday, Thursday, President Trump said that the war in Iran is going along swimmingly, that's the word he said, reintegrating rosy predictions about the end of the war that began on February 28. Hours earlier, he had said in his social post that a 10-day ceasefire between Israel and Lebanon is set to begin at 5 p.m. ET time. He added that Israel Prime Minister Benjamin Netanyahu and Lebanese President Joseph Aoun would be invited to the White House for what he describes as the first meaningful talks between the two countries since 1983. The U.S. State Department said both sides aim to create conditions for lasting peace, including mutual recognition of sovereignty. And the department said that the effort includes improved border security and reaffirmed Israel's right to self-defense. It also notes shared concerns over non-state armed groups from undermining Lebanon's sovereignty. And what all of this has done is to reduce the price of global oil, and Brent is now at $98. It lost 0.77%. WTI almost 1% down at $93.80 a barrel. And all of these conversations, of course, as well as the promise that the second round of peace talks might be beginning between the United States and Iran, that's also giving hope to traders. In Nigeria, the oil share index gained 1.23% yesterday to close at 211,901.01, sustaining the positive sentiment that the markets acquired since last week. The market cap is now 136 trillion naira, 136.435. It's always important to note that we started this week at 202,000 level, and now we're at 211. And analysts say that this is being driven majorly by investors positioning for dividends. We've seen the financials and announcements for dividend come out, and we're expecting more from major corporates, and so investors want to be a part of that gain, and so we see ourselves heading to 212,000 level. So we saw volume was positive. We are talking about the activity, positive yesterday. Top gainers yesterday also, we see Guinea Insurance, Transnational Express sustaining that positive sentiment. Aradel also has been doing good. Top losers, Ikeja Hotel, Wapik, and CAP. They were the top losers at the close of trade yesterday, and top trade had the banking sector well represented by occupying the first three space: Zenith Bank, UBA, and Accessco. The House of Representatives Public Accounts Committee, they've approved a 248.64 billion naira financial relief package and a 10-year debt restructuring plan for three major electricity distribution companies. That's Ikeja, Kanu, and Jos. And the figure comprises 128.6 billion naira in accrued interest on debts from 2015 to 2025 and 120.06 billion naira in historical principal obligations. The chairman of the subcommittee, Mark Obeta, says that the recommendations, which follows the adoption of a report by its technical subcommittee, form part of broader legislative efforts to address legacy debts and restore financial stability in the electricity markets. The Securities and Exchange Commission has set a new minimum capital wage for the 7.5 billion naira for operators within the market, and that's part of efforts to strengthen financial stability and enhance investor protection. Well, the Commission says that the move is aimed at ensuring that market players are well capitalized to absorb shocks, improve service delivery, and boost confidence in Nigeria's capital markets. Industry stakeholders are expected to comply with the new threshold within a specified timeline, with the regulator warning that failure to meet the requirements could attract sanctions. The development is part of broader reforms by the SEC to deepen the markets, attract more investment, and align Nigeria's financial system with global best practices. Let's head to Washington now. On the sideline of the spring meetings, the IMF World Bank meeting is still going there, ending in a couple of days. The Arab Bank for Economic Development in Africa, they've signed a 40 million euro credit line with the Development Bank of Nigeria, and the president of the bank, Mr. Abdullahi Abdusai, made the announcement. One of those side events at the meeting, the spring meetings in Washington, D.C. The managing director of the Development Bank of Nigeria, Mr. Tony Okpanachi, says that the move is a further boost to its drive towards sustainable financing for small businesses.
It's not only about access to finance. There are also some capacity building that we also provide, and this enables them. How do they adapt to challenging environment like this? How do they adapt to global crisis? Again, part of how do your business adapt? These are some of the things we also do in terms of our capacity building. Again, for the financial institutions that we work with, we also provide technical assistance to them on innovative lending. Innovative lending during this crisis period, innovative lending during this challenging period. How do you lend to small businesses, for example, without asking for collateral? How do you lend to them using cash flow based lending practices, for example? Those are some of the things that we believe that providing technical assistance to them enable them to also lend. So while the impact is there, how do they adapt and how are they able to mitigate some of the risk that comes with the impact is what we work together with financial institutions that we partner with to deliver to MSMEs. That for me is quite key. Knowing Nigeria, for example, we have a youthful population, growing, entrepreneurial. So if you don't create jobs, engage the youth, then of course it's going to be a major challenge. So for any economic development, for a Nigerian economy like us, we have youthful population, I think the issue of job creation is quite important. And that is a major takeaway from me, from all this conversation that is going on.
Well, still coming from the spring meetings there in Washington, a new institution that could reshape Africa's economy is emerging as Nigeria's federal government there. They've agreed to host the African Monetary Institute, and it's a technical engine for an African central bank and eventually a single continental currency for a region where cross-border trade is still slow by 42 currencies and costly payments. The stakes seem high, and the deputy governor of the Central Bank of Nigeria is in Washington, and he hosted this conversation, and the report is sent in by our correspondent Sarah Achimugo.
We already have established.
This meeting is part of efforts towards harnessing the huge potential on the African continent for economic prosperity through the establishment of the African Monetary Institute.
We've all agreed about
For the region's economy, the AMI targets 3 points: transaction costs, resilience, and investment.
Probably what you need is when the stars will align, and perhaps that is now. Right? Perhaps this is that spark that we require, where all the pockets of work that's been done over the last 2 decades will then all of a sudden come together and significantly shorten the journey. Right? So I strongly believe that what we need to focus on is, as much as possible, all the talk has happened. We've all agreed about the need for this. I think the case has been settled. Across the continent, there is a vast agreement on the need for us to come together. We might differ on a few of the details, which hopefully through the intergovernmental process.
The African Monetary Institute was created by African Union in February 2026 as part of Agenda 2063. For West Africa's 400 million population, the countdown to integrate, improve economic growth begins.
The Monetary Institute is not the convergence criteria. So this is a step towards getting there. And what I'm saying is we shouldn't stop and count all the problems without taking the steps, because the journey of 1,000 miles starts with a step. And remember, one of the key functions of the African Monetary Institute will also be harmonization of statistical and monetary policy frameworks, designing the trans-African automated real-time payment systems, and so many other things that can then bring us to better clarity and in addressing the convergence criteria issues that are often being raised.
There were words of support from both the federal government and heads of the continent's body.
The journey of 1,000 miles begins with one step, and the courage for you to take that first step matters a lot. This is the first step we are taking, and I know in the end we will be able to achieve all that we have in place to show the full integration in Africa.
The vision of the African Monetary Institute is to provide technical and policy foundation for a resilient and integrated African financial system. From Washington, D.C., Sarah Chimugu, Channels Television News.
All right, Sarah, they're really busy keeping us updated on what's going on in Washington. Let's follow a bit of that. We had the launch or the promise by Nigeria to host the African Monetary Institute, and of course it's about managing the finances on the continent for the greater good and reducing reliance, especially on some of those institutions, which we talk about interest rate and all of that. But let's perhaps drive this down to Nigeria and to individual levels and talk about integrated lending solutions. I wonder what that means. Immediately you hear it, but anyway, don't worry, you will get a better picture of it this morning, because we have the Executive Director, Commercial Solutions at Z-Vance Finance Limited, Mr. Ayo Oladimeji. Mr. Oladimeji, good morning. Welcome to the program.
Good morning. Thank you for having me.
Great. So we see Africa, the meetings going on in Washington. Africa seems to be building a coordinated front, looking for how to explore more sources of capital and to better use it. But of course, it starts from individual countries, and then it goes back to the regional aspects. And so now we're talking about integrated lending solutions. What's that?
Integrated lending solutions will be non-traditional financing structures that empower business owners, mostly small and growth stage businesses in frontier markets, to access capital for business growth. So when you talk about traditional capital, it would be the traditional term loan in a bank, an overdraft facility on the debt side. On the equity side, it would be getting equity funding for a business. But we now have innovative instruments such as embedded financing, supplier credit, factoring, transaction level credit access for the sell side and the buy side, depending on what part of the market you're looking at. So all of that put together is what we would refer to as integrated financing solution.
Does this protect against high interest rates?
It's faster to deploy, and it solves this age-long problem of matching customer expectations to what the financier is able to provide. So traditionally, you would have a structured term loan or an overdraft that is generic, that does not necessarily take into account the cash flow cycle of the business, or may not necessarily take into account the seasonal fluctuations and all of that. That doesn't give sufficient flexibility. What these embedded financing solutions do is, to essentially allow the business owner, the entrepreneur, to exercise their willpower. They have a standing line of credit, for example. They can use it at will. They only pay for what they use. Some of those financing solutions are even delivered to the supplier. So you take a case of, an FMCG distributor. The funding goes to the manufacturer or the large-scale importer. And once funding is made available by the financier, all the business owner needs to worry about, the distributor, is to make his logistics vehicle available for pickup and distribution.
It sounds like working capital.
So working capital solutions, fit right squarely into the use case, the typical, one of the frequent use cases for embedded financing.
And I know that when you talk to those in the agricultural value chain, for instance, they always have this issue that traditional sources of funding do not consider the specifics. And so that's why we're supposed to have banks like the Bank of Agriculture. Unfortunately, I don't know how impactful that has been. So are you saying that this integrated funding now caters for these special areas?
Let me answer the question at two levels. One is that when you look at the general economy, the economy is largely organized into sectors. So agro-processing, farming, agro-processing is a sector. Oil and gas is a sector. Renewables, the gig economy, e-commerce, mobility, logistics, those are unique sectors within the economy, very important sectors. The usefulness of an integrated solution is that you deploy capital that match the nuances of a particular sector. So regarding agribusiness, which would be the second part of your question, is agriculture is a specialized economic activity. You cannot extend financing for agriculture without taking into account the specialized nature of that economic activity. That's number one. Number two is that in terms of risk and returns expectations, agro-processing or farming has its own peculiarities. So if you're going to play in that sector as a lender or as a capital provider, you have to be patient. You have to invest in market expertise. You have to invest in partnering with the stakeholders in that sector to ensure that the solutions you're bringing to market match the need or the needs of the participants, the entrepreneurs, the value chain, from the farmers, the smallholder farmers, large-scale farmers, the aggregators, to the off-takers, the manufacturers who utilize this agricultural input for food production, and of course at the distribution end, the distribution companies or the retailers that get it to our tables at home. So it requires specialized attention, and when you're developing financing solutions, you have to pay attention to the sector that you're deploying capital into.
Is there a special attention? Because right now we do have a lot of gaps. Maybe because food is one of the basic things, so I'm really interested in it. For instance, we still have about 50% of agricultural produce, wasting away because of preservation and storage. So I'm just trying to say that if this is a funding solution that could help plug that, could there be a special attention given to areas like this that we see very noticeable gaps in the economy?
I mean, absolutely. And food systems are vital, right? We have a large growing population. It's expensive to import food. So it just makes sense to ensure that agro-processing works. And there are multiple value chains that are important, from the oil palm value chain, the soya bean value chain, the wheat value chain, the cassava value chain, several value chains within the agro-processing sector. Your question is around, how much is being done? Is it enough? What is being done to reduce wastage? The wastage problem is for the most part a combination of logistics infrastructure on the one hand, and cold chain solutions to enable producers, farmers, store up yields from the farmlands before those products are moved to the market or to the off-takers. The good thing though is that over the last 2 years, a number of providers, including ourselves, have come into the market with equipment financing solutions, with partnering with international cold storage solution providers. I believe there are 1 or 2 organizations currently that are providing mobile cold storage for moving produce from farm gates into to the storage of the off-takers, and those kind of embedded solutions within the value chain, solving specific problems around cold storage, around logistics. Government is doing what government will do, but the private sector is also taking a significant lead, and we're seeing capital moving in the direction of enabling food systems, and that's why we're also betting long and big on food systems financing.
Yeah, well, I'm happy to hear that, but we need to see more, obviously, so that's that gap. But I asked the first question: the cost of funding, does it reduce with this integrated lending solution?
I would say it's risk so lending is a risky business, and cost of capital in Nigeria is not at its cheapest level. We're seeing some downward adjustments in cost of capital, but not at the level at which we would all be super happy. So I would say that the kind of capital that is available, debt financing that is available, is affordable. It's the kind of capital that the business can still take on and make some margin. Small businesses, mid-sized businesses, growth stage businesses.
Okay, and then the mobility financing.
Yeah.
What can you tell us about the appetite of sector-specific financing? We talked about agriculture. Logistics is also a big one.
It is.
In Nigeria at this time. Some time ago, someone contacted me to say they bring in strawberry from the estate in the north,
right,
and they only had one airline that was doing it, and that airline was about to stop. So how would they get strawberries from the north to the south where the market is? If they try to do it by road, it gets bad before it gets to the southern parts of the country. So logistics is also plaguing development and the growth of the economy.
It is, and we're seeing again providers rising to the occasion. We're seeing entrepreneurs who do the hard work, the heavy lifting, rising to the occasion, bringing in innovative solutions. So cold storage, important for solving things like this, for things like this, but also equipment financing, mobility financing, critical for solving for mobility solutions. So if a business owner wants financing for trucks, for cold storage equipment, for last mile distribution vehicles, there are equipment financing solutions, car financing solutions that we provide and that other providers also offer in the market to solve for this. We're also seeing green mobility financing. So we're not just talking about mobility financing now, we're talking about financing for electric vehicles that are used for business purposes, either in the ride-sharing sector, which is a massive job creation platform for our teeming youth population, or on the agriculture and FMCG side of things, where logistics is a big enabler in terms of the interaction between the different stakeholders in those value chains.
All right, well, we hope we would hear more of this integrated lending solutions and to be able to penetrate those areas, of the economy that really need affordable financing. I mean, let's be realistic. Capital is not cheap in Nigeria at this time.
Not yet.
Not yet. Yeah. Hopefully it will be in a short time. Well, thank you so much for your time.
It's been a pleasure.
On the program. Mr. Ayo Oladimeji, the Executive Director of Commercial Solutions of Z-Banks Finance Limited. Thank you.
Pleasure.
Let's take a break now. When we come back on the program, what are subnationals doing? Well, we just had a conversation with private sector. What about the states? Not just the federal government. That's after the break. Please stay with us. Welcome back. Still watching Business Morning here on Channels Television. Let's put our eyes on the subnationals at a time like this in the economy. We talked about, preferring some solutions, funding solutions is what we just discussed. But what are the states doing at a time when even the IMF is asking government to create buffers for their citizens, for their economy, when the geopolitical environment is being really, really harsh. Well, let's put our eyes on Nasarawa State now as they prepare for their summit. They've been having this for years, and we'll be discussing them right here. And we see all the promises and plans and all. Perhaps we can review how much impact that has had on the economy. On their economy, that's the state economy before Nigeria. We have joining us from our Abuja studio the Managing Director and Chief Executive Officer of Nasarawa Investment and Development Agency, Mr. Ibrahim Abdullahi. Mr. Abdullahi, good morning. Welcome to the program.
Good morning, and thanks for having me.
Great. So I know I'm tempted to just ask you straight. I mean, I think you have a couple of days before your summit and all, but first, it's not a very friendly world now, and it's not just about Nigeria, and buffers are being created by governments at different levels in different countries. We haven't seen any from Nigeria, unfortunately. How is the state adjusting to the new normal now? We have higher oil prices, which is supposed to be more revenue for the government, but then the people are paying for it. In Nasarawa State, what are you doing to help the people at a time like this?
Thank you very much. Nasarawa State to revitalize the economy and ensure that the lives of citizens and residents are improved began with a very meticulous and ambitious plan that we started implementing since 2019, and that plan also speaks to the current economic realities. Our plan since inception of the administration of Governor Sule has been hinged on revitalizing the state's economy through implementing institutional governance reforms that are hinged on improving the state's ease of doing business, building strong institutions that will sustain development efforts, attracting investments and creating more jobs. So these have been the critical growth drivers for Nasarawa State, and we've been seeing remarkable results since 2019. The growth in the state's GDP, the growth in employment and job creation, the growth in IGR generation, infrastructure projects all across the state. It's really interesting times for Nasarawa State.
Yeah, and in your many conversations and meetings, you always talk about having a sustainable trajectory. So even while you have, record these benefits over the years, you talk about sustainability. What are the sustainable or sustainability structures that ensures that these gains are kept and even there's progress, they are being improved upon as time goes on?
The biggest and perhaps the most important is institution building. We have focused on building centers of excellence that will hold these programs and reforms and ensure that they are sustained. As you know, there is no economic growth that happens over a very short period of time. These reforms must be sustained. These reforms must be improved upon in successive administrations and leadership. So building institutions, ensuring that we also build a political leadership consensus that really agrees on the economic growth imperatives for Nasarawa State.
And we know that your governor, Engineer Abdullahi Sule, is also big on gas. He did talk about the need to educate people on the value of gas. Some people say Nigeria should not be known as a country that has a lot of oil, but it should be more of gas. I wonder if you've had improvement in that line of thoughts, that's educating the people, actually extracting that value in the gas value chain.
Yes, we've recorded some progress in that regard. Recall at our investment summit in 2024, we signed a collaboration agreement with the NNPC and the Gas Aggregator Company of Nigeria to develop a gas master plan for Nasarawa State. That was the first step we took in ensuring that we not only engage in sensitization of the value of gas, but we actually unlock the investment opportunities in that ecosystem. Since then, we have actually developed a gas master plan that requires about over $400 million in investment to unlock that value chain, build a gas pipeline infrastructure off the tee of the AKK gas pipeline, and also encourage investment within the value chain. Since then, we've had a series of investors that have really put their money in within the gas value chain in Nasarawa State, particularly in CNG investments. Nasarawa State, as you may recall, is the first state to build and have a CNG hub that is now functional, also supplying the region.
Now you're preparing for this year's summit, and I guess that all of these areas, talking about gas, your minerals and land, which Alhaji Dangote has always applauded, all of this will be part of your conversation, but it will be interesting to count your gains over the years. You've been having the summit for how many years now? What are some of the gains? Is it just another opportunity to meet and talk?
No, by no means. The NASA Investment Summit is not a talk shop. It is a platform to, one, promote the economic opportunities in Nasarawa State and also showcase progress made. In 2022, at our inaugural summit, we had a total investment commitment of about 250 million United States dollars. We doubled that in our 2024 summit with investment commitment of over 500 million US dollars. And some of these investments and commitments have been actualized. As I've said earlier, our gas master plan collaboration was launched at our 2024 summit. Today we have a gas master plan that is now being used to engage the investment community, especially in the gas and energy sector. So yes, we're not organizing just a talk shop. It's not a talk shop. It's a real platform for serious deal making. A lot of the investments that we continue to attract in Nasarawa State have gone through this platform. Today, Nasarawa State is what we all refer to as the lithium capital of not just Nigeria, but the West Africa region. We have two of the largest lithium processing plants in the country, all domiciled in Nasarawa, one with an annual capacity of 3 million tons, and the newest one with an annual capacity of 6 million tons. So these developments in Nasarawa State are real. They're economically catalytic, and I think that Nasarawa State and the whole country will benefit from these serious investments.
I mean, it's good that you have those plans, and it's a project and a conversation that your state governor has been pushing for a bit, because we've had him on this program a couple of times, and he's told us the partnership with some foreign investors and all. But then one would ask, what about the people, the residents and the indigents? How much of their participation can you record? When you talk about, for instance, the skills assuming we have the capital coming from outside the state or outside the country, what about the skills, the jobs? Are they qualified? Are they able to fill those job requirements so that they can benefit from these big projects?
Absolutely. The Governor Abdullah Sule has been leading from the front in this regard. He himself having been a beneficiary of technical education from which you derive this sort of skills that are necessary. So as we embark on our drive to attract investments, the state has also had a very ambitious and laudable human capital development plan, which is backed by some institutions, centers of excellence. We established a skills acquisition center institute in Nasarawa State called the Wing Commander Abdullah Ibrahim Vocational Institute, that is training certified technicians to be able to close the gap, the jobs gap, so that as more industries come into the states, there will be the manpower that is well equipped to take advantage of this industrialization. So it's not just about attracting the investments, it is translating into real jobs for the people. In our investment report, our 4-year investment report, we recorded over 40,000 jobs created across the different investments attracted across different sectors, agriculture, solid minerals, manufacturing. So to answer your question, there is a plan to make sure that our people benefit from the vast investments that are coming into the state. We have our technical institutions creating certified young people with certified technical skills that will make sure that our people benefit from the economic revolution happening in Nasarawa State.
What about opportunities for people to create businesses, small businesses, funding, access to facilities, land, shops, and things like that?
So what we've done in this regard is to improve government services as far as interacting with both citizens and the private sector. So we have digitized access to land permits. As you know, Nasarawa State has one of the best GIS frameworks for land administration. We've also improved our interface, regulatory interface. From the comfort of your offices or your homes, you can get a lot of our regulatory approvals for doing business in Nasarawa State. And as far as the small business ecosystem is concerned, government is not a financial institution, but government continues to work on unlocking the barriers to attracting more capital. So when more capital, private capital comes into the state, more financial institutions come into the states, there will be opportunities available to small businesses to tap into. We've also run series of capacity development to small businesses to ensure that they meet the requirement for financing. As you know, only bankable businesses can attract the requisite financing to invest, do business, and grow. So we're doing a lot in this regard. And also, since the inception of the summit in 2022, the governor has been hosting what we call an SME challenge, just to underscore government's commitment to building small businesses. Every year we host the summit. We also host an SME challenge, and in this SME challenge, small businesses from all across the state, largely driven by young people, compete for prize money. The interesting thing about the SME challenge is that it's beyond the prize money. We also provide a very structured institutional capacity building support for these businesses, so that the prize money they win at the SME challenge becomes the foundation for their businesses, and you'll be able to attract more investments, more capital into their various ventures. So we're making progress in that regard as well.
All right, thank you so much for sharing that with us, and we certainly hope that that's sustained to touch more lives. Mr. Ibrahim Abdullahi, the Managing Director and Chief Executive Officer of Nasarawa Investment and Development Agency. Thank you so much. I wish you the best in your upcoming summit.
Thank you. Thanks for having me.
Now, driving Nigeria to drive and expand Nigeria's gas infrastructure, that seemed to have received a boost with the groundbreaking of a major processing facility in Delta State, the 200 million standard cubic feet per day gas plant by Southfield Petroleum Limited in Utorugu, Ughelli South local government area, is expected to enhance energy capacity, create jobs, and support economic growth.
It's the groundbreaking ceremony of the Southfield Petroleum Limited gas processing plant in Utorugu, Delta State. And it's been described as a landmark development for Nigeria's energy sector, with significant benefits for the Ughelli community and beyond. The project signals a major investment in gas infrastructure aimed at boosting processing capacity and strengthening the nation's energy security. The event attracted top government officials, industry players, and stakeholders in the oil and gas sector, alongside members of the host community, all gathered to witness the final commencement of the project.
To demonstrate our commitment to Nigeria's just transition plan and nationally determined net zero pathway through production of cleaner energy for domestic and industrial application. That's good.
Representing the Delta State Governor, the Commissioner for Oil and Gas reaffirmed the state government's support for investments that drive development and job creation.
The state, through the Ministry of Oil and Gas, provided the needed support, ranging from facilitating the process for the acquisition of the certificate of occupancy and a freedom to operate permit in favor of SPL.
The Minister of State for Petroleum Resources, Oil, Heineken Lokobiri, accompanied by other guests, formally performs the groundbreaking ceremony which signals the beginning of operations in the area. The minister says the project aligns with the federal government's gas expansion agenda aimed at deepening gas utilization across the country.
This is a very, very highly capital intensive project. So SPMB, as part of the federal government's commitment, decided to invest in this project for the benefit of all Nigerians and for the purpose of ensuring that we have energy that will stimulate industrial growth.
When completed, the plant is expected to significantly increase Nigeria's gas processing output and serve as a catalyst for further investment in the oil and gas industry.
With the supplementary gas treatment plant that we're putting in place, is going to enable us to extract liquid petroleum gas, which is LPG, cooking gas, as some of you will know, and also auto gas for sales directly to the communities around the nation at large.
Stakeholders say the initiative represents another step towards harnessing Nigeria's vast gas resources for national development, while positioning Delta State as a key hub and the country's energy landscape.
And Odua Investment Company Limited and Energy Infrastructure Development Electron Energy Development Strategies Limited, they've entered into a joint development agreement, and they are set to develop a 50 megawatts gas-fired independent power plant in Lagos. Closing the power supply gap in Nigeria, which the Renewable Energy Association of Nigeria terms the world's largest electricity access deficit, with approximately 45% of the population, that's about 90 million people, lacking grid access. Odua Investment Company Limited, in partnership with Electron Energy Development Strategies Limited, have entered a joint development agreement to develop a 50 megawatt gas-fired independent power plant.
The project will be developed through a special purpose vehicle, Ogba Power Limited. Odua Investment contributes the land approximate of 8,290 square meters at Cocoa Industry Limited complex, which has been valued and forms part of the equity for this project. Electron, with its proven technical and financial expert, leads the development, financing, and eventually operation of the plant. Our equity holding in this project is only 7%, while Electron holds 97%. Importantly, the project company will pay Odua Investment annual royalty fee of 3% of the gross revenue defined as gross electricity sales, less statutory traffic tariffs, and gas pass-through cost. This ensures that our shareholders benefit directly from the success of the project over the lifetime. And I'm sure you know our shareholders. They are the 6 states of Nigeria, the 7th largest economy in Africa.
For Odua, this is a project that will strictly follow set out timelines.
The joint development agreement provides a development phase of up to 60 months from the date of execution to full commissioning. However, joint targets as reflected in our public commitment is to reach commercial operations within 24 months after financing close. This is the discipline we bring into this project. We have also agreed on clear provisions regarding land utilization. If the 50 megawatts capacity is not operational within 60 months, which I believe they will do by Electron, we will pay a pro-rated rental for any unutilized portion of the land.
While the project begins in Oba in Lagos, the partner says there is a sustainable plan.
The 50 megawatt independent power plant in Oba will provide reliable, dedicated power to businesses within one of Lagos' most important industrial areas. This means less dependence on unstable grid supply, a move away from costly, inefficient, diesel-based self-generation.
Odua has also indicated the possibility of increasing its obligation in the future for other projects. It's time to go global now. Will Ibong is here.
Thank you, Ini. Let's check in with what's happening in the global space and see U.S. President Donald Trump says recent concessions by Iran could pave the way for a deal to end the ongoing conflicts. Now, Trump expressed optimism that an agreement could be reached soon as talks continue following a fragile ceasefire between both sides. The negotiations focus on key issues including Iran's nuclear program and regional security concerns, which remain major sticking points. While progress is being reported, officials caution that a final agreement could still take time as discussions continue. Now let's take a look at the performance of U.S. stocks yesterday after President Trump said the war in Iran should be ending pretty soon. Yes, Maria.
The U.S. stock market was mixed on Tuesday as the Dow Jones was down at 0.2%. The S&P 500, though, was up at 0.23%, and the heavy tech Nasdaq was also up at 0.36%. As many investors are hopeful that this could be a positive sign and that the U.S., Israel, and Iran conflict could be ending sooner than expected. As if this occurs, we could see a U.S. economy that's stronger than what was once expected.
Thanks, Maria. Now, the ECB is expected to raise interest rates as early as June as inflation pressures across the euro area intensify. A Bloomberg survey shows policymakers are likely to tighten monetary policy in response to higher energy-driven inflation linked to ongoing geopolitical tensions in the Middle East. Economists now see inflation rising more than previously expected this year, reinforcing the case for a rate hike after the ECB held rates steady in recent meetings. Now, Australia is set to sign a multi-billion-dollar defense deal with Japan to acquire advanced warships as it moves to strengthen its naval capabilities. The agreement involves the purchase of Mogami-class frigates, with some vessels to be built in Japan and others in Australia to support local industry. The deal is expected to boost defense cooperation between both countries and enhance Australia's response to evolving security challenges in the Indo-Pacific region. Now, wage growth in Japan is showing continued momentum, with smaller firms joining larger companies in agreeing to pay increases. Data from recent labor negotiations show average wage gains of over 5%, signaling sustained upward pressure on incomes. The development is seen as a positive signal for the economy and a key factor being closely watched by the Bank of Japan as it considers its next policy moves. And that's the Global News Brief. I'm Will Ibang.
Thank you so much, Will. And just before we go, yay, the NGX has crossed again to a new level. Remember, it closed at 211. We're at 212,000 in this early trade, up 0.38%. The drivers of the Zenith Bank, Fortis Global Insurance, FCMB, UBA, they are the top trades at this time. Airtel is still sustaining that sentiment. So it's a green market that we're having. Hopefully, that's what we'll have at Intraday when we will be back at 1:30 for Business Incorporated. I'm John Mekwa, wishing you a great and a restful weekend ahead. Bye-bye.